Hello and welcome to Trading the Trend. My name is James Boyd. We welcome you. Question we ask ourselves every Thursday is what? What trends are you riding? Also, a follow-through question from yesterday. As you build your balance sheet of assets, equity, think about what type of investments you want on your balance sheet to try to produce capital appreciation and or income. It's very important because I think the goal of all of us is we want to become wealthy, right? That's a goal, or eventually one day retire, etc. But it kind of really starts with kind of picking investments, trying to get capital appreciation. With that capital appreciation could also be dividends as well. Cameron just taught that class, so that kind of might be a follow through as something we could discuss here today as well. Now, remember with what we talk about, we also show educational examples on X. There's my handle. We have Connie Hill with us in the chat, so we welcome her as well. She'll actually post her link in the chat. You can click on it and follow her as well. We'd like to welcome all of you here today. We got Scott, says aloha. My son's getting married in about 3 months in Hawaii. And yeah, there'll be a good little family time there. So coming your way, Scott. Hello, Sam, Josh, Kevin, Debbie, and many others. Let's go ahead and hop right in. Also want to see if we can get to as many questions as we can. Now, real quick as we get started, our examples will be stock and option based, not all options. Remember that options carry high level risks and are not suitable for all investors. Important to understand there's different types of options. All options are not the same. And also remember that the information is provided for general informational purposes only. This webcast discusses technical analysis. There's other approaches like fundamental analysis may assert some different views. They could also complement each other, okay? Also remember when we talk about examples, we will do those on the software application. Investing involves risk, including loss of principal. And also when we talk about rolling strategies, those can involve transaction costs or additional transaction costs. And also remember, if we talk about, let's say, futures or futures prices, we're not trading futures. We're looking at the prices to see if that could influence the indexes, sectors, certain stocks, and so on. And also remember when we talk about our examples, we'll talk about I want to really heavily talk about finding trends and kind of what is a way to kind of really find them, unlike quick, okay? Second, I want to kind of talk about shorter term versus more intermediate, and we're going to look at some examples, okay? Now, first off, what I want to do is I want to pull up just real quick. Let's go to the platform. So I want to kind of write down just real quick. Kevin and I teach on Friday the ETF class, okay? And that ETF class, we actually talk about, let's say, and I'll write this down, okay? We'll talk about U.S. markets, okay? International. And these are kind of some categories we go over. There's a purpose of why we're doing this. International. I'm not going to international today, but we know that all investing is not just U.S. markets, of course. Then we actually have, let's say, regions. Okay, regions, we got countries, we got also sectors, we got industry groups, we also got commodities, okay? We also have with that, in that case, we also have, what else do we have? Maybe for some investors, they might look at, let's say, currency. Example, given US dollar. The reason why I bring this up first is in those lists that we share on Friday, when I say share, I show you, I can't send them to you. What I've actually done is I've sandwiched all those lists in one list. That is a very effective way. In one list, whether it's on your mobile device, iPad, phone, whatever it is, that you can pull up a list, rank by percentage, okay, change, and now you get a sense of where are investors investing, domestic, international, also what regions, what countries, what sectors, what industry groups, is it commodities, is it currencies, etc. And so you really get a sense of, and by the way, when I also say currency, we'll also throw, let's say, on interest rates, the rate example given that we're going to talk about, we at least mentioned, we could just bring up TNX, dollar sign TNX, because that's going to influence some of those dividend paying stocks, etc., or dividend paying areas. Homework assignment number one. Now, by the way, how long would it take to do that? Now, historically, I've always segmented those, meaning I had a separate list. 2 days ago, I actually sandwiched them all together. have really liked kind of doing that. Now you might say, oh, how long did it take? 15 minutes, okay, to put them all there. Really not that bad. I would be interested to see how you like it, okay? So if you have those, now by the way, tomorrow I'll see if I can't show those lists with Kevin. And then what we're going to do is take those lists, put them all in one, and when you wake up in the morning, get a real sense of what's going on. Now, when you talk about U.S. markets, etc., this would not be a bad idea to put futures tickers. Not that you're trading futures, but that way you could see overnight what's going on when you wake up, etc. Okay, so nothing wrong there. Now, so let's kind of do this. So first off, we actually see the VIX up. So if this was the list here of what we got, we see VIX up, let's say 2 points, 12%. Not completely different than actually where we've been before, okay? But volatility up, which means probably pressure to the downside on some areas. Now, when we actually also pull this up, if I pulled up, let's say, looking at the trend column, well, I mean, if I look down the list, 1, 1, 1, 5, 1, lots of ones, we got prices below both moving averages, the 10 and the 30 period moving average, the 10-day exponential, 30-day simple. So we got some downward price pressure. Now, we said when we actually take a look at, let's say, the SPX, we said over the last couple of days, it's been at best neutral, at best, okay? So this is where kind of having an understanding of different types of strategies is important. Number two, different types of categories of investing. Now, when we say sectors, industry groups, we'll also include categories such as what? Growth, I for income, or I'll put V for value, I for income. Okay, we can also put that in a list. So if we're kind of seeing more volatility in the marketplace, it wouldn't be a complete shocker that a lot of people are looking for value, think price multiples, but probably also income. Now, when we talk about, we'll take a look at that in just a moment. Now, if I were to, let's say, look at, let's say, the NDX, whether you look at the NDX or the SPX, I don't really see them breaking out of the range, but we do see them moving around. Yes. We'll look at NVIDIA here in just a second. When you look at the Dow Jones itself, okay, the moving average, we don't see it, at least right now, going green on either moving average, at least at this moment. Yesterday, I think we could have probably had a turn. I didn't see it exactly at the end of the day to see that. But today, we kind of had it like an erratic price movement, 497, and then we're down at 492, down 0.4%. But is it really changing? Is it going outside that range? Can't really say that. And this is why some investors like that time decay, because really sometimes you don't get an upward or a downward trend. The only constant is time. Now, the assumption with that is assuming that the volatility stays lower or flat, okay? Now, what I want to do is just real quick, when we talk about, let's say, some of these commodities, now, by the way, when we talk about, let's say, commodities, etc., this would be based upon futures prices. Not that we're trading the futures prices, but we're just looking to actually see the price of that commodity. Some of these actually had pretty volatile moves this morning. Did anyone else notice that? You saw gold come down to its 20-period moving average. Yeah, now it's a green candle. It wasn't this morning. When you actually take a look at silver this morning, it was also pretty good in terms of selling off. Still green shading here. Liked it better yesterday at the high. I mean, sound like Lisa Jack there, but she's a good gal anyway. So sure. And if you take a look at copper, it sold down near the 10-period moving average, got a little bit of a bounce. I want to come back in that area of precious metals again. I think of precious metals as precious staples, okay, as well. So we'll come back into that. Though one other thing that I think we need to point out is crude oil. Crude oil also went on a pretty good ride this morning, sold off, and then came back up. Now, in some of those energy names, they're still getting a push there. I think when we actually also pull up the sectors, okay, The Dow Jones Transports kind of looks like it's forming a symmetrical triangle. Not a breakout yet, but getting to the apex of it. I do want to go back to the income areas briefly. When you look at, let's say, utilities, brand new high yesterday. Not that far off the high today. When you look at, let's say, the staples, not a high, but still holding the higher low, which is at 887. And if we take a look at, let's say, the other one, just really quick, the real estate, and I'm looking at the index, $IXRE, that's the same. So you're going to notice that while some of these others have gone down, these have been able to kind of hold up a little bit better. So sometimes in volatility, it's not about that they're gaining per se, that they're actually just having better holding power. Okay? Hello, Thea, back to you. Now, if we also take a look at something, now I want to kind of move just real quick to some of the things that are causing the market to move. Well, I think it'd be pretty easy to kind of notice. So you got NVIDIA here down, let's say, $10 and or 5%. Now, I want to make an assumption here, okay? And the assumption is yesterday that someone took a bullish trade and they wanted to see, let's say they decided yesterday that they sold a 190 put. Now, this is what's kind of always interesting, okay? The situation, whether the stock goes up or down, the volatility tends to go down, irregardless if the stock goes up or down. And if you look at this, the volatility yesterday was about 56 and falling, 54. And then today it's literally at 49. So if we look at yesterday, it was about 53. So with, let's say, today's price moved down, the volatility still fell, even though the stock fell. Now, let's assume that someone yesterday did a bullish trade. They sold something. Let's just kind of take a look at, let's say, the 190 put. Did those prices go up or down? Now, we're assuming if the stock went down, that the options would have increased in value on the put side. Well, let's go take a quick peek. We're going to go to the trade tab. If we go to the trade tab, let's imagine someone sold the 190 put. Well, how can we see what it did? Well, let's right click on that, the price. Let's now go down to where it says more info and go to right to where it says toss charts and put it in that second box. So the left-hand box, first box, will be the stock price. The second box is going to chart the option price. Why does this matter? Well, wonder if some of you are actually maybe bullish or bearish over the earnings. Now, if we take a look at this, I'm going to pull up, if I can, let me just unlink this, let me unlink that. And what I'm now going to do is let's go there and let me just bring this up. So I'm just now going to bring this up one by one. So obviously there's the stock. And if you take a look at, let's say, the second one, here's the option price. So if someone sold those options yesterday, they might have sold them down for around $7-ish, maybe near the lows. And today they're pretty much up about $3.50. That's assuming they did it yesterday. They'd probably be losing on that position. Now, we have a position on that was done about a week ago or so, and it's down. Well, actually, it's up a little bit, okay? And I'll show that momentarily. But so that's one area that's actually pushing the market down. The other area that's kind of pushing it down is we have Caterpillar down about, 3% or so? And with actually Caterpillar being down 3%, that's at risk of actually breaking support. Amazon, we did a buy stop order on that yesterday. We have not gotten filled on that. Did not go up high enough. And then you got Apple, another stock, which can't say it's bearish. It's just kind of more red candle today, okay? Now, what I want to do here is I want to go over kind of some stocks. So it goes back to that main theme, which is tech stocks have been somewhat volatile. Now, as we get through some of these earnings, we kind of get that in our rear view mirror and then kind of focus on what's next. You got to understand something. When you look at, let's say, a company like NVIDIA, that is a stock that acts like an index unto itself. What do I mean by that? Well, if you go to the trade tab and say how many shares were bought or sold today, the answer is 239 million shares. How many stocks trade 239 million shares? The answer, not very many. I bet if you looked at actually the index, the product that tracks the index, they might not even have 239 million shares. So on these earnings, if people wanted to buy and sell, especially sell, the earnings day, around the earnings day, is the greatest chance to liquidate the position and or try to add as there is liquidity, okay? So now, when we take a look at actually kind of NVIDIA going forward, that could be a kind of a discussion we can have in just a moment. I want to kind of start with one that's kind of, go back to real estate for just a moment, okay? Now, there was a question in the previous session kind of talking about interest rates. And if you look at, let's say, interest rates, this is kind of important because when you think about everything, your house, your car loan, your credit card, things like that, it's really based off a standard rate, right? Now, if we actually bring this up, TNX:CGI, this is actually kind of important because if you look at this, if this is dropping, now remember, if this is showing 40.02, okay, 40.19 now, it's moving, move the decimal over one place to the left, and we're really seeing rates that are right around 4.01. Now, if you take a look at this, we're now seeing that the interest rate is declining. Now, that could actually be a good thing. For consumers, might not have to actually pay as much in terms of borrowing. Same thing for companies, potentially. So when we actually see this drop, if some investors say, look, I have been doing fixed income, buying T-bills and so on, they might say, hey, those are becoming a little bit less attractive, rates falling, and those dividend stocks being a little bit more attractive. Dividend yield, which can change, could be attractive, but also at the same time where there's a trend as well. Now, what I want to do is I want to start off with just real quick SPG. Now, SPG right here is that Simon Property Group. Now, if we go back to this for just a moment and we pull this up, if we said to ourselves, what do they actually do? Now, remember, the goal is to ride trends. Now, the focus of the portfolio is we're trying to actually be in positions. And if we said the litmus test is, when we look at this stock, there better be stocks that look like this. When I say like this, we're talking about stocks at a minimum above a 30-period moving average. Would prefer them to be above the 30 and the 10. But if they're not even above the 30-period moving average, why are they in the trend portfolio? Okay, so we're trying to actually have a common foundation where we're trying to actually have stocks where at a minimum they're showing kind of meeting those two criteria. Price above the 30 at a minimum, and then the price maybe even above the 10 if there is trend and momentum. Now, if I go back to, let's say, Simon Property Group, and we just look at a daily chart, you're going to see that this is what it looks like. Now, some of these stocks, like tech stocks, et cetera, they've been so affected by AI this, AI that, AI this, AI that. Well, a lot of these companies might not necessarily be focused by, influenced as much by AI, okay? Now, if we said, I don't know what they really do, go to analyze, let's go to fundamentals for just a sec. We're just looking at the fundamentals because we want to see what they actually really do. So they own, develop, manage premier shopping, dining, entertainment, mixed-use destinations. This all sounds like things I don't do, okay? This sounds like fun. I don't want to have fun at all. So this is where some people who want to have fun tend to go out to have fun if they wanted to. Now, here's the deal. If we take a look at this, we're going to go back to this. And remember, with rates falling, real estate companies, real estate investors, the opportunity sometimes could actually be rates falling. It might be more attractive, okay, price-wise, potentially. Now, what we're going to do is in trade number one here. Now, what I'm going to do is we're going to do a stock example. Now, in this example, what I'm going to do is I'm going to pull this up right in the paper money account, go to the trade tab, and what we're going to do is type that in, and we're going to put this example given. Now, in the IRA, we have some shares. What I'm going to do there is first is raise up the stop. Now, a lot of times we don't change the type of stocks we're looking at because what is trending could still trend. Trends typically don't change from one day to the next, typically. So before we actually put on the new position in the margin account, I'm going to go back to that chart, that second chart, third chart. Yeah. I'm going to go back and look and see where's that 8 or 10-day low. The 8 or 10-day low now is sitting at 191. I'm going to left click on that, drag it up. Okay. Now I'm going to let go and I've moved up my stop. Now you're sure thinking that, over the next couple of days, it would be really nice to get that 8 or 10-day low to actually move up. When we look at today, 1, 2, 3, 4, 5, 6, 7, 8, really would actually like this kind of over the next couple of days. Now you're going to see that we're 1 day short. Okay. Tomorrow, the new 8-day low is going to be moved up to 196.59. So why is that 8-day low sitting right there? And let's confirm that, okay? It's actually sitting there at that 8 days back, okay? And it's because that we're off 1 day. Let's kind of fast forward to tomorrow. Let's assume the price holds here. Where's that new 8-day low? It's sitting right at 196.76. So let's kind of play the game, go forward. If we go forward a day, that new 8-day low is going to be sitting right here, okay? And we can count back just like we did. 1, 2, 3, 4, 5, 6, 7, 8. Okay? And that 8-day low is going to be sitting right there. So we kind of artificially move that up a little bit closer. Okay? Now, Pia actually says, JB, wouldn't you also consider raising stops to below 2% of the higher low? Well, that's kind of what we did. Okay? We got a lot closer. And we just saw the discrepancy between 9 days back and 8 days back, how just going one more day forward, which will be tomorrow, would be a big difference. If we set the stop underneath the higher low, it would be pretty daggum close to where we just moved it to. Yeah, I think we're thinking alike, which is dangerous. All right, here. Now, going to set the new position. Let's go back to the margin account. Now, what I'm going to do in this case is we're going to right click on that chart. Okay, doing a stock trade, right click, buy custom. Now what I'm going to do is going to go with stop. Okay, now in this case, what we're going to do is, again, we got to think about position size. If I said on this account that I want to actually do, let's say, a $4,000 position, no more than 10% of the account value, that's going to be about 19 shares of stock. Now, what is the dividend on this stock? Well, let's go take a quick look. The dividend on that stock, if you hold it through the dividend, the yield 4.32, okay? The PE 14.37, really low, okay? So quarterly dividend, the ex-dividend date coming up is March 9th. Now, if you go to actually on Schwab.com, you actually go to the Learn tab and you actually go to the online courses. There's an income course. You'll learn more about kind of some of the terminology of ex-dividend date, things like that. Be aware of that. The ex-dividend date is the first day it trades without the right to the dividend, okay? So if the investor's trying to get in to get the dividend, need to be before that date. Now, what I'm going to do is we're going to go ahead and put the stop. Now, what I'm going to do is I'm going to set that stop exactly to where we moved it up to from the IRA account. That's about 196.80, okay? Now, if we double check this, stop day GTC, if I just eyeball it, it looks about like, say, $7 worth of potential risk. Potential, well, because, well, it's a stop. It's a trigger to sell. We don't know if it's going to sell there. And if we had, let's say, 20-ish shares of stock, that forecasted loss would be about $140. $140 on this account size would not be too much. We're going to go confirm and send. And now what we're going to do is going to go ahead and say, send the order. Okay. Now that position is sitting right there. It fills. Got to stop. Sitting right there. Okay. Now, if we go back to just real quick, the IRA, where was that target that we actually set on that initially? 215. Okay, so 215. And on that chart right there, there's the dividend payment, 220. Okay, so the answer to that, and it looks like we're thinking the same thing. 215, okay, and the dividend upcoming on the 10th, okay, 220. All right, now, if we also, I'm also going to go back to just real quick one area. I want to go back to financials. Now, here's the thing. The financials, it's kind of like good and bad, okay? And there was a question on this, okay? So when you look at, let's say, $ TNX CGI, the 10-year rate, you're seeing those rates decline. Now, let's say you're thinking 2 weeks ago, the bank thought, wow, we could probably lend the money out for 4.25%. And let's say they got the money for 2.5%. And they're thinking, hey, the difference between 2.5 and 4.25 is 1.75%. The problem is, as the rate comes down, the margins, the percentage differences become less and less and less, thus less profitable. So now that's not the only way that banks make money, of course. If we, for example, brought up a company, I'm going to use the example given, Morgan Stanley. Clearly, Morgan Stanley doesn't just do banking, but they also do investing and so on and a couple other things. Now, I want to go back to something which we kind of said before, which is looking for like what type of trends. When we actually talk about looking for trends, we said the foundation is we're looking for stocks where they're at least above the 30-period moving average. Do you realize most of all your negative positions you've ever had in your entire life all had the same common denominator? They were all below the 30. And if you've ever held a stock below the 30 and it just fell and fell and fell and fell, and I've been there, okay, it is nasty. And if you hold on to stocks where the price is below the 30, that's bad enough, or the shorter term moving average is below the 30, the red line, and that price is below both those moving averages, man, it can be tough, okay? Now, the goal is not to sweat, okay, and just feel the pressure of like, is it going to go back up? Don't think so, okay? I mean, if you're below there, you got negative trend, you got a headwind, and you actually have negative momentum. So when you actually have price below the moving average, 30, the 10-day moving average, the blue line below the red, man, you got everything against you at that moment in time. We're not trying to fight the trends, okay? We got to stop fighting the trends. Now, the one thing is if we go back and look at, let's say, Morgan Stanley, we've had a recent pullback to an upward trending moving average. Now, some of these pullbacks, they can leave lower shadows. Those lower shadows could actually be where some investors say, look, I'm willing to buy. They might start to establish or buy, and they might say, look, I'm going to set my stop below that 165-ish area, thinking maybe it could stay above there. Now, let's go back to, let's say, the daily chart for just a moment. If we go back to the daily chart, this is what it looks like. So this is daily chart. We look at daily chart, it looks like a W pattern. When you go back to, let's say, the weekly chart, we kind of see those lower shadows. Now, why is the color of the candle purple? The color of the candle is purple because the price is in between the moving averages. The purple color candle is signifying the loss of momentum. The orange color candle is signifying you're at an area of resistance. The green color candle, the dark green, is saying, yeah, baby. I mean, okay. Yeah, well, that's what you're thinking. Yeah, keep going up. That's exactly what you're thinking. Okay, I just want to make sure you're listening. Okay, how many of you did I catch? Yeah, you're thinking, I'm right. I knew it was going to go up. That's what you're saying. Come on, I know you better than that, okay? All right, here we go. It was like a movie or something like that. Now, here we go. When we look at, let's say, Morgan Stanley, you're going to see that these tops, okay, I can name the show, but I'm not going to. If we go back and look at kind of some of these highs, you're going to see that if we said, look, can we see the lower high? Well, remember, you can see the lower high. Where's the green candle and the red candle? Right there. Where's the green candle and the red candle? Right there. The green candle and the red candle. Well, I got green candle. I don't have red candle. The green candle, red candle. The green candle is where it went up to, and actually the red candle is where it fell back down. Those are what you call lower highs. Why does it even matter? Well, because it matters, because if we're thinking the price could be breaking out, you're now in what we call trend 2. Okay? Now, what I'm going to do on this is if someone says, look, I think we might be turning around here. Now, by the way, on this, do we have earnings coming up? No. Did it just pay a dividend? It did $1. When was the last earnings? It was on January 15th. So we don't have anything in our face. The estimate was 241, actual 268. And you're going to see that on typical earnings, sometimes, not all the time, they took some profit. Okay? Now, if you take a look at this, I'm going to go back to the trade tab for just a sec. And let's imagine, now there was a comment on this of like, say, hey, wonder if you want to do like a leverage position. Not everyone has $100,000, okay? Not everyone has $200,000. Now, is it a recommendation only to have $100,000 or $200,000? Well, I think you know better than not. You're probably going to need more than $100,000 or $200,000. So you could recommend to yourself how much you think you're going to need, okay? Now, what I'm going to do in this case is I'm going to go to the trade tab. On this, we're going to type in MS. Now, we cannot assume that it's Morgan Stanley, it's liquid. Well, how do you know that? Liquidity changes, of course, right? Now, when you look at the volume, we got 3.4 million shares. You're also going to notice that when we go down and look at the March options, I'm now going to go down to the April options. God, that feels nice. Now, some of you back east that have been buried alive nearly in snow. Now, I don't think it's funny because I lived in upstate New York for 15 years of my life. I am still thawing out, literally, okay? Me and my 4 fingers, okay, left from hypothermia. Now, the biggest actually thing is if you take a look at this, we're going to go down, we're just going to verify where do we see the open interest. And if you take a look at this, you're now going to see the open interest in the March. Yeah, there's some thousands there, but there's also some thousands down here. Now, what's kind of interesting about this is there's a lot of open interest on the out of the money options. And by the way, it's not just one of them. I mean, over here, it's kind of like, you got that, but I mean, you got to have it like this consistent smattering, if you will, of of open interest. Now, when we look at the spread there, if we kind of said which one's kind of tighter, 40 cents, 10 cents, 10 cents, 10 cents-ish wide. Now, what I'm going to do is let's make an assumption the investor says, look, I want to buy a call, and what I want to do is a short put vertical. Now, the whole idea behind this is, let's say the investor says, look, I want to sell the 170 put. I want to try to collect a credit, okay? So now what we're going to do is we're going to right-click on that 170, sell, and we're going to come over here to vertical. This is not your typical vertical, okay? Well, what we mean by that is this is really a cash-secured put, but then we're buying a put down below us to cap the risk, not at zero. So what I mean by that is, I mean, yeah, the stock could fall all the way down to zero, but the investor's saying, that doesn't sound that attractive to me. I would like it where the risk is less. So how do you make the risk less? Easy answer. Buy a put. The short put vertical typically has a strike, 1 or 2 below whatever strike you're selling. If we actually said, look, I'm going to come down to the 10-ish delta or below, try to see where there's some liquidity, where we're seeing more liquidity. Now, how are you actually getting to that liquidity so fast? I'm looking at the bid-ask spread, okay? I'm also looking at the open interest. The one we're actually seeing tighter bid-ask spread and the open interest, it's really the 150, okay? So step one, what I'm going to do, now tell me if you're with me, okay? This is really a cash secured put with downside protection. Now, when you widen out the strikes like this, the delta is higher than a typical short vertical, okay? You're also probably going to have that theta is going to be higher because the put that you're buying is farther out of the money, okay? Now, why do we care about this? Now, I don't know about you, but there's some people that says, yeah, I'd like to buy a call, but I just don't like that time decay. There's some investors that just don't like that, okay? Now, what we're going to do is we're going to use this credit. And what we're going to now do is go single order and go first triggers SEQ. Now, when we go first triggers SEQ, we're saying first put that trade on. Second, then we're going to come back in and say click on that at the money call. Now, let's kind of put this on a diagram so we have a real sense of what we're trying to do. I'm going to right click on that line and say analyze the trade. Okay? Now, when we do this, analyze the trade, we're going to go to where it says analyze and risk profile. We really want to see the diagram of it and what the option Greeks are. Now, if I pull this up, right click on the call, analyze the trade, click. Now what you're going to see is the diagram that we wanted to see. Why do I want to see this? Well, this now diagram. So on the bottom, okay, let's start with the left. On the left-hand side, profit loss, plus or minus. It's not too hard to understand. And also here on the bottom, that's the stock price. As the stock goes from, let's say, 177-ish, where we are now, we go to the right, watch that blue line, profit, stock actually goes 177 or lower, loss, okay? Puts a diagram. Now, if we actually kind of minimize this and slide that over, at some point, you're going to see that there is a max loss built into this trade. Why? Well, because you got a right to sell the shares at 150, okay? Now, if we actually took a look at this and said, okay, the delta on this trade is what? Answer, 79. So if the stock goes up $1, it's about $79 approximately potential gain. Stock goes down $1, about 79-ish dollars on potential loss. We looked at this and said theta is negative. If you have a trade that's negative theta, you want the move to not happen slowly, but quickly. That negative theta decay is going to increase your break even over the life of the trade. The first red line right there, that's the break even today. That second red line right there, that's the break even at expiration. This is just like a loan on a house or a loan on whatever. If I'm doing a remodel job or buy a house and try to refix it up, whatever, to sell it, well, the longer that I'm sitting in that loan, I got to pay more interest. Then when I go try to sell the house, I need money above what I bought the house for to pay for the interest of the loan, okay? Interest, you can think of it as time decay, okay? Now, if we take a look at this, we're going to go back to the trade tab. Now, remember, this has a built-in max loss. We're going to go confirm and send. And now what we see is on the call, there's a 65-cent commission. And what you're going to see is also for the put spread, $1.30. So grand total there, if we take a look at this, is $1.95. So now the way we could try to replicate this is if we went out and said, look, I'm going to buy 79 shares of stock. Well, if you went out and bought 79 shares of stock, you're going to need 79 shares of stock. Stock price is $177.25. You would need $14,000 to buy 79 shares of stock. Now, the long synthetic is not a stock. The long synthetic has an expiration. The long synthetic actually has different strikes. They have different option spreads, and the stock has a dividend. These options, there's no dividends, okay? So there's differences here. Now, if you take a look at this, we're going to go ahead and send that right there. Now, you might say to yourself, well, James, I was kind of thinking about if that kind of swung right back to the upside, I like to try to sell that. Well, think of it as if the investor had units, 79 units, if you will, that if we went up to, let's say, the prior high, what would that potential be? Well, think of it as 79 units, if you will. And if we went up from here to there, it's about $13. Take the $13 times it by 79, and that's going to give you approximate profit on that position, approximately, okay? So think about the delta as if a conversion. We're not trading the stock. The stock is the stock, but we're actually taking the stock gain or loss, and that delta, we're converting it. We're taking the stock movement times the delta, and that's converting it into the profit or loss on the option trade. It's not going to be exact because you got bid-ask spread, liquidity, things like that, but it's going to give us an idea of what that potential gain could be. Remember, on this type of trade, the longer you take to go to that upside, the more time decay you can have. And that's the other factor which can influence how profitable is this trade, okay? Now, if we take a look at this, okay? So let me just go back to just real quick. Yeah, so the reason why, okay, if I went back to, let's say, if I take a look at this just real quick, I want to go back to something just real quick. So the comment is, yeah, so check me on that. So this right there, sorry about that. I could have sworn I clicked on the April 175, and that's what I wanted to do. The put spread is what we talked about. That's fine. This we would want to actually have as the April as well. So if I just take this and say, look, let's just cancel that side of the trade, it's not going to cancel the put spread. All I needed to actually really do is come in right here on the April, okay, change it to the mid price, confirm and send, and then just change it. So now those are all right there. All right, good. We're on the same spot, okay? Now what fills first? The call filled first, okay? So when you look at that long call, that's the right to buy those shares at 175. Now, if you put a house under contract for a certain price, and you already told them, hey, I'll give you 500,000. Well, some of you are laughing about that because you're thinking 500,000. My garage is worth 500,000. That's probably true, okay? So here's the deal. As you have that house under contract, of course you want the house to go up because you already have it on paper that you can buy the house at 175. Now, in this case, that right ain't free. You paid a premium for that right, okay? Now, let's also just take a quick look in a minute or so. What other stocks are kind of standing out that the investor might want to actually kind of look at? So number one is a couple of these stocks that might be trying to get a turnaround is Netflix. Netflix had gone down quite a bit, went through a 10-to-1 split. Netflix trying to get a reversal. For some investors who say, look, I'm trying to look for new trends, but also something that might have some implied volatility, it might be Netflix. Now, if you also take a look at, let's say, stocks like NEM, precious metals, notice that we're pushing up into resistance again. Now, the longer that we can stay at the resistance without falling down, there's probably just better chances of us pushing up through resistance. That's the idea. Now, the other one is we're going to keep an eye on is the silver one, which is kind of showing the Pan American Silver, higher low on that one. And also we're going to flag the SCCO, Southern Copper. Saw some volatility on this in the last day or so ago, but still finishing up the day with green candles, okay? So when we actually take a look at a couple of these, let's say, spaces of precious metals, don't forget about these. And I think we still have to kind of say, look, we're going to keep an eye on some of these ones that have higher yields as well, Altria and also Philip Morris. If we're talking about things that kind of are consumer staples that have higher yields, Altria and PM as well, but they also have trends, okay? So our focus here, what we want to do today is really kind of focus on how do we find these trends? What's the common foundation of what the paper money is trying to have? That's what we talked about here today. Now we got Brett Crowther coming up next, talking about short verticals. Okay. I'll be back on with Kevin tomorrow morning. We'll talk about more about that list tomorrow in depth. Like what tickers in those lists? Why do we actually put them all together? How does that help you and so on? Talk more about that tomorrow, and also kind of some wider scale of investments as well, not just US markets. Now, I'm out of my time here today. Remember, with what we discussed, you can also find us on YouTube. Our channel on YouTube is called Trader Talk Schwab Coaching Webcast. And just notice that you can subscribe to that for free. If you enjoyed today's session, click on that thumbs up button. And thanks to Connie and all of you as well here today. Now, also, remember with what we talked about, it was done for example, illustrative purposes only. Go out and practice these type of strategies. See which strategy that you might like for potentially yourself. And also, if you say, well, how would I practice it? Make sure you use the paper money account to see if use that to see if it's a strategy you would consider. And also practice some of these things that we've been talking about. So stay tuned for Brett Crowther coming up next. Thank you so much. Take care. Bye-bye.